All right, guys. So you guys are buying the wrong type of stocks, and that's why your portfolio isn't doing well. So we got two types of stocks: growth stocks, which you can buy in the Vanguard Growth ETF, or value stocks, which you can also buy in an ETF, the VTV ETF here. So it depends on your investing style. If you're mainly going for growth, huge volatility, you want to do growth stocks. As you can see, the growth ETF is down 25%, and the Vanguard Value ETF is going to be down only 3%. So, of course, the value ETF is not going to move as much, so you don't lose as much money as a growth ETF. And growth stocks include a lot of volatile stocks, mainly the tech sector. As we can see, this ETF mainly consists 40% of the tech stocks as Apple, Microsoft, Amazon, Tesla. These are all high growth stocks and they're very volatile. So if you're not able to wait out those huge volatility swings, growth stocks may not be for you. And you want to look at value stocks. As we can see, this ETF has done very well. Not much volatility. So if you don't want to wait out a lot of volatility, if you're not mentally capable of waiting out downturns, value stocks may be for you. And as we can see, we have a lot of healthcare, financial services, energy in this ETF, and some value ETFs or value stocks that come to mind would be stuff like Coca-Cola, as we saw Chevron, Procter Gamble, Johnson Johnson. So these stocks are not going to move as much, but they are going to be dividend-paying stocks. So that's a trade-off. You're trading growth for a stable dividend payer. Whereas a lot of growth stocks do not pay dividends at all. They are mainly focused on growth. And of course, you're going to have higher returns, but of course, higher drawbacks when we are in bear markets. So it really depends on your investing style. If you have a great mentality, if you're in it for long term, you want to do growth ETFs or growth stocks, but if you do have a short term time horizon and you don't really like seeing your stocks drop and can't stomach it, value stocks are more up your alley. And you're getting paid dividends every 3 months. So that's also pretty nice for people to see. It really does show that your money is being put to work and it's paying you back. So that's the main reason why a lot of people get this wrong. A lot of people invest in growth stocks. They see the stocks drop, and then they get scared and they stay out of the market. So if that's you, you want to go into value stocks, and you can buy a simple value ETF such as the VTV, or if you want to do growth stocks, you want to do VUG. But for growth stocks, you definitely want to buy and hold, and just don't even look at your portfolio because it is going to get kind of crazy. As we can see, these huge volatility swings. But value stocks, you can definitely look every now and then, just because it doesn't move as much and it's going to be a lot safer.